It's not a bad start actually. 2024 was not a bad start, purely if you look at the market from the lens of what happened in the world and what the Indian narrative was. So the week gone by in a sense was again dominated by flows, valuations, but in terms of a specific moot point, flows were decent. The dollar index seems to be inching higher. That is a concern in the world. And 10-year paper has gone higher. So the way I look at the week gone by is that the so-called Santa rally hangover, I think, is over. That was reflected in the way how last week market moved. There was no linear move. We saw the market bias positive, but the market in a sense got two good days, one flat day and one nothing sort of a day. So the market traded with a positive bias, the mood was positive, the momentum declined and the flows were decent. So 2024, I think in my book, if I just have to analyze the week gone by, it was not bad. The gray area or the fly in the ointment, so to speak, is that the bond year, the 10-year paper is now at 4%. Could that be the big narrative change going forward, and are bears likely to build on that? But for me, the first week was a okay week. Nothing great, nothing bad, nothing excited. Surely the hangover, which was the Santa rally hangover, that hangover is over.
Yep, and even when it comes to individual sectors, that has been in the spotlight. In particular, let's just sum up how the week gone by has been, because while it was minor cuts or consolidation for the frontline indices, it was the broader markets that actually continued to rally. That's a snapshot of Friday's move for the global markets, and you did see quite a bit of consolidation. There was a stronger than expected jobs report as well that came out.
Calling out the sector right also, it was a very gratifying experience. But now I think it's important to get the sector right, of course, but within that sector, I think earnings season will be differentiating the numbers. So for me, this time around, you actually will see differentiation which will start emerging as the earnings season will start rolling. For me, that would be important. Second, I don't see a major fall in the market, but I do expect that the market could move, or Nifty could move in a very tight range, which is on bad days you want to be a buyer, on good days I guess you need to be a seller if you're really a trader. I think this market is likely to settle in a range, and depending on the earnings season, the bias would be decided. The first week, the bias was positive. Could the bias change? The bias could change. So in a range-bound market, you actually could see the mood point changing from one end to the other end. So I'm not making a case for a collapse. I'm simply making the momentum of January, of February will not move to January, rather than calling out a sector. Oh, defense is going higher, oh, railways is going higher. I think you actually will have to call out the names of the companies now. I'll give you an example here before we go forward. Last year, and I'm using this as just as an anecdote here. Let's look at last year's change in Infosys, and let's look at last year's change in IT. And any guesses? HCL Tech and Infosys, two companies, two reasonable companies, both of them are in top 4. Now that's Infosys for you. Expected. IT mein kuch nahi hua. Now let's look at HCL Tech. बहुत कुछ हुआ, right? So if you got the sector right, it was not a great talking point.
You had to get the stock right.
You had to get the stock right. I think we are moving there yet. Between October and December, it was all about getting the sector right. It didn't matter whether you bought which defense stock you bought, as long as you bought a defense stock. It didn't matter which railway stock or real estate stock you bought. I think that differentiation will start from this earnings season. So the market will trade in a range. Individual names will be called out. The bias, I think, we'll get to know in the next 10 or 15 days. But bear in mind that January has not been a very gratifying month. So it really could be a dull month. To put it in the weather climate, it's going to be chilly for the bulls. And it's going to be foggy, at least for the rest of the people who are not in Delhi.
Yeah, absolutely. Well, it's fogged out in Mumbai as well, not just Delhi. But, I think the strategy for the day, and given how the market did after down days as well in the week gone by, did show that amount of resilience, and we did see a bounce back on most days on the latter part of the trading session. I guess, buying at the lower end of the decline could be a possible strategy.
That, I think, is the most prudent strategy, because you're not jumping and preempting the upper move. You actually know that the market is not going to break down. You're buying it on the bad day. That gives you a cushion. That gives you a margin of safety. See, October, November, December, you have to buy high and sell higher. And if you are even buying on gap ups, even if you're buying stocks, if they were 5-7% higher, you miss the rally, you were you were rewarded. I don't think that is going to work. Now you have to really pick your spots. So again, it's not going to be a month where you have to chase momentum. Let prices come down to you, and then you will have to buy. So it's a very basic approach. I mean, November, December, whatever you bought, as long as you bought, you've made money. It didn't matter what the Nifty level was. Just buy, and next morning sell, and then you see money coming in your bank.
Yeah.
ऐसे नहीं होगा.
Yeah.